Alright everybody, welcome to another 3T Behind the Lens video of some sort that we're doing. My name is Jeremy Quintanilla. I am the co-founder and CFO of 3T Warrior Academy, and before we get started, I just need you to do a few things for me, like drop a bunch of these cards that I'm going to talk about in a minute, but if you can go ahead and smash that like button, subscribe to the 3T Behind the Lens channel so that you can be notified whenever these amazing videos come out. That would be fantastic. So, what we're going to be talking about today are pass-through entities. I don't know what happened to my other expo pin. Here it is. We're going to be talking about pass-through entities today, but before I do that, I just want to let you know about our 3T Freedom Conference. It is super amazing. We're going to be talking about building communities or building your tribe. There's going to be a link down in the episode description if you want to come to the conference. It's going to be April 14th and 15th in Mesa, Arizona at our 3T Warrior Academy headquarters. And what's also super exciting about it is we have our NFT X Royalty, and we made cards to go along with the X Royalty NFT. And if you come to the conference, not only do you get a pack of one of these bad boys, but you get to play for a special prize. It is a game, so our NFT is gamified. So make sure that you check that out as well. And again, there's going to be a link in the episode description to get one of those tickets. So let's talk about pass-through entities today. Inside of our 3T Warrior Academy, I get this question asked a lot, like what is the best type of entity for me? Now, that being, or business entity. That being said, there isn't a one-size-fits-all answer, and so I'm going to briefly go over what are known as pass-through entities today, because these ones seem to be very common, especially the one known as a limited liability corporation. Now, you set these up at a state level, but obviously their tax classification is at a federal level, and we're going to be talking about why these are pass-through entities. Now, there are two types of pass-through entities. There are LLCs, which can be taxed like an S-Corp. I'm not going to go into that right now. Or they can be taxed as a partnership, which are both pass-through, or you can actually have an S-Corp that's going to be taxed like an S-Corp. And so what this means is that, first of all, the entity itself does not pay taxes. So you don't have to file an LLC. You have to file the taxes, but you don't have to pay taxes on the profit that the LLC makes at the business level. You actually pay the taxes at the owner's level. So I'm going to give you a brief example. So again, owners pay taxes on their portion at their level. So let's say me and Brenda's behind the camera. Brenda, say something.
Hi.
So Brenda said hi. So me and Brenda, we have a business, and we own that business 50-50. So we have a great year, and after all of the expenses are taken out, we have profit of $50,000. So because me and Brenda own this business 50-50, she has a right to $25,000, and I have a right to $25,000. Okay? Now we can distribute that to ourselves, or we can keep it in the business, and that's going to be important here in a moment. But at the end of the year, when we do our taxes, we file our taxes. It's going to be a 1065 if it's in a partnership, or it's going to be a 1120S if it's an S-Corp. We file those taxes, but again, the business doesn't pay the profit, doesn't pay taxes on this $50,000. What happens is me and Brenda, on a personal level, have to pay taxes on the $25,000. So we get a K1, we give that K1 to our tax person, and they file our taxes. So let's say Brenda, she has her 50%, but Brenda's also a W-2 employee at 3T Fitness. And at 3T Fitness, after she has taken her deductions, she owes taxes on $25,000. But hold up, there's this K1 over here for $25,000, which she also has to pay taxes on. So she actually has to pay taxes on $50,000. That is her actual taxable income, and it works the same as if you have different brackets. So depending on where that $25,000 falls in a bracket will depend on how much you actually pay in taxes for that $25,000, which you can go do a YouTube search or go research that online if you want to find out more, and maybe in the future I'll do a video about it. Okay, so she pays taxes on the $50,000. But remember earlier when I had said over here, and I asked you to remember it, that we could take this $25,000 out of the business if the cash existed, or we could keep it in the business. Well, let's say we keep it in the business. Does that mean that because we did not actually get $25,000, we don't have to pay taxes on it at the personal level? The answer is no. We actually still have to pay taxes on it, even if we took it or not. So you still pay taxes on that $25,000, whether you took it or not. So again, I know this was very brief. If you want to get more in depth on some of this stuff, make sure to join our 3T Warrior Academy. I do like business essential training. Well, I do business essential training inside of the academy, but I will continue to make videos like this so you can get a super brief overview of how a lot of this stuff works. So again, my name is Jeremy Quintanilla. You can follow me on all the socials at Age of Jeremy. My end phrase is remember, be thankful, grateful, and kind. Warriors rise, get your shit together, and we'll talk to you soon.